just had to jump on real quick to talk through a beautiful example of the framework that I was talking about just yesterday. So the last video I uploaded, I was talking a bit about this framework here, which is a market maker model within a retracement. So a retracement that turns into a market maker framework type expansion. Basically with an intermediate term low for first stage and then a second stage of the market maker model, which has very strong order flow. But I recognize that here today, as well as another very key signature, which I will show right here. That is the 1 hour manipulation closure that we get right here. There's another perfect example of that up here where we draw out this wick, find the midpoint, we then close above the midpoint of that wick. That is the manipulation closure signature because we instantly reverse. Normally a closure above the midpoint of the wick would indicate bullish order flow. When that fails to happen, that becomes the signature, and what that indicates is that we are likely developing a original consolidation. You can see that we then later return up to the exact same area. We fail to take out the swing high that did the manipulation closure. We make relatively equal highs, another signature of a consolidation, and then sell off. Another thing that you'll note is if we increase the numbers of candles here, we have the 4 hour chart on the right, and if we draw out the midpoint of the wick on this candle as well, we have a 4 hour manipulation closure as this candle closes right there at 1 AM going into 2 AM. That is the signature. It results in this move lower. We have that exact same thing here today. We had 1800 open up on Sunday, ripped up, hit this previous 4 hour high. So that's the 10 AM high from Friday. That is a 4 hour candle high. We got a really nice reaction off of that and immediately sold off. So straight away we did hit that significant liquidity, and on the lower time frame you can see that we actually also hit this trailed buy side liquidity as well, which anyone who was short on Friday, very obvious high for trailed stops to reside, and right at the Sunday open we hit that. We then sell off and rally straight back up. Now this is looking really strong through here. However, we are hitting all this internal range, and on the 5 minutes you'll see that we're actually having a 3 drive pattern as well before displacing lower. But we are kind of leaving relative equal highs. So what gave me confidence to go short right here and add on to the short here and then also add on to the short down here is essentially the manipulation closure. I recognize that we had the same signatures up here. We are clearly developing a market maker buy model at the moment. We're leaving smooth highs behind and heading lower. There are further targets down here, really obvious sell side pulls that we're likely to reach. So why would that not continue to happen over here and continue to leave smooth highs and sell off? Especially seeing as we did actually take all the internal range within this range. So when we were developing these relative equal highs, but then we got this manipulation closure, instantly reversed straight after that on the 1 AM candle, I then trusted that this could likely be original consolidation. What further confirmed that was the fact that these hourly opening prices, that's the midnight open with that yellow line, then 1 AM is up here, both at very similar prices. That's another signature of a original consolidation. And so when you see a manipulation closure, such as this 1 hour, and then there are also multiple hourly opening prices at the same place, relative equal highs, all those are signatures of a consolidation. If I can identify consolidation, I can then anticipate the market maker model forming afterwards. After the original consolidation, we get this expansion, then I'm looking for first stage. For first stage, we want an intermediate term high, obviously a short term high to the right of it, and then second stage is going to be institutional order flow entry drill. If I jump down to here, you can see I started marking it out, but we have that consolidation, expansion away from that consolidation. We have a first stage of the market maker model right here, and then expansion low. And then after first stage, if we look over at the 15 minutes chart, you can identify that after the first stage in this corner, we then have second stage, which was a institutional order flow entry drill, running out this impulse high and rejecting it quite abruptly. When I saw us abruptly rejecting that impulse high, I recognized that this was indeed second stage of a market maker model, which afterwards comes the smart money reversal, which is what we're seeing right here. But for second stage of the market maker model, and because it's second stage of the model, that means that entries such as the impulse rejection failure entry technique, or any fast entries that don't have much of a retrace, they all work in this kind of area. So institutional order flow entry drill, partial entries into fair value gaps, propulsion blocks, all those things will work very effectively here. This is the only 1 minute swing low that would be considered an impulse low right there. I didn't expect we would reach up to that because of the nature of second stage being that we would remain heavy. And also on the 1 hour chart, if I jump back over here, we had a very long wick where trail stops would reside, as well as this long wick below. And on the 15 minutes as well, really obvious long wick and relatively equal lows above that. So it's a delirium framework, then we've got this long wick. Second stage was happening right here. We just made relatively equal lows. So I was expecting heaviness as we took out this low. Because we expected heaviness, didn't think we'd have much of a retrace. Us falling short of the 2 a.m. candle open is also a confluence. And the entry that I was able to use was based on the lowest internal range liquidity and looking for an impulse rejection failure. And I'll show you what that looks like. That's identifying where in this range, if we are bullish and we aren't actually going to take out this low, where would we reject from? Well, that would clearly be the impulse low right at the discount of the range, which you can't see on the 1 minute, but it's very clear on 15 seconds. But I wasn't just going to wait for a 15-second closure back below it, although that did play out perfectly fine. I wanted to see a 1 minute closure back below the swing low. Because if there was a 1 minute swing low through here, I would have used the 1 minute candle closure. So waiting for us to get below it, begin to reject, which we do here. And then as soon as we got a closure back below on that candle, that constitutes a short entry, stop loss above the high, and got that lovely push low down towards the 20s. Got this really nice, easy place to take profits, such as this flat candle right there, the midpoint between these two liquidity pools. And ultimately, we just fell short of ERL. So that was one of the entries. I'm kind of doing this backwards. I could start with talking through this setup up here. But that is second stage of the market maker model right there. That is first stage with the intermediate term high that balanced this range, and then a short term high to the right of it as well. Original consolidation, which is those signatures I mentioned earlier, and especially those hourly opening prices. But this right here is a specific framework that is based on the retrace. If I move this over a bit, so just from a distant perspective, you can see that we have this framework right here. The idea is that this is a retrace from ERL to IRL, which can also have been a failure swing. So we get that right here. We have a reversal, a failure swing, and after the failure swing, we're selling off again and break the low. That means we've now had a retracement, a reversal, the SMR up here, and then a drop low. After the smart money reversal, I'm looking for first stage. We then get that right here. As we are getting first stage, I'm looking for us to break the high again, or in this case, break the low of first stage. And once we do that after first stage, that means that is complete, and we're now looking for second stage of the model. that is exactly what we see here. We have the retracement and failure swing and break the low. It means that we can now anticipate first stage of the model. We then get first stage right here. We break that low, which I've marked out. After breaking that low, we need to deliver buy side delivery. We get that because we actually take out this short-term high just here, go a tick above that, and then drop low again. As soon as that's happened, we can now anticipate speed and distance in this area. And once we get a closure back below that low, that is a entry signal. We're expecting speed and distance, so we get that nice strong push lower. And you can see I've marked out number 1. The idea is that this is one break of a low after second stage. So that second stage is now played out. And then I'm looking for that second break of the low before managing risk, and then anticipating that it could reverse if it wanted to, which I assume would actually just be this low right here, which is quite close. And then that you could put a number 2 there. And had I traded this correctly, I actually ended up getting stopped out in this area. But had I traded it correctly, this would have never have stopped me out and would have continued low. But my average entry was about here. And I trailed my stop thinking that, okay, after this big down closing candle, we shouldn't retrace all the way back up. So I put my stop right there and we got taken out very nicely with that. But still, really nice winning trade. And what was so nice about it is that I was able to recognize this exact framework very easily. I was able to trust that this was first stage, and I knew exactly what to look for second stage. The reason why I also mentions that this was second stage is because this fractal from this low all the way down, that is it's like a market maker model within a market maker model. It's like a framework within a framework. So sure, this is a original consolidation, first stage and second stage, but also this is part of a larger high time frame model as well. And you can clearly see on this 5-minute chart we have the first stage there. That leg continues pushing lower and only retraces at this point. And then if you look at the 15-minute chart, we also have a really obvious IOFED, rejection from that high. We have an obvious draw on liquidity, and so we could trust that that would continue pushing lower. So that's just a really nice example of literally my most recent video before this one. I went through a whole bunch of examples of this exact framework with the retracement, break of the low, first stage, and then looking for second stage, and that pushed that lower. And it's really cool just to see it play out like that. And yeah, so yeah, wanted to go over that. And another thing that if you're going to take something away from this video, or I'm going to remember something as well for myself, is the idea that the manipulation closure is a significant part of recognizing an original consolidation. If you can recognize a original consolidation and have a clear direction of the market, you can likely identify the intermediate term high for first stage. And if you can do that, you can likely identify where second stage should happen. Once you can identify where second stage is going to happen in the model, you know exactly which areas, this area and this area, should have really heavy price action, and then you can trust selling all the way down here. You can trust selling all the way down at this low, knowing that it should continue pushing lower. So I actually sold literally all the way down here, which if you're just watching price action, you think, wow, it's so low. We've just sold off, like it might reverse from here. But if you have this framework in mind, you can trust that, okay, we should be very heavy right here. It shouldn't even really come up far at all. And you can easily trust having an entry like that. And the same thing on this side. Like, sure, it just sold off really deep, and we're at a deep, like we're already deep in this range. Like, oh, I missed the entry was up here. But because you recognize it as second stage, you can wait for this key low time frame entry technique that gives you confidence to enter short right there. And although it looks like you're selling at a mad discount, because you have the original consolidation, the first stage, and now you've identified the second stage, and you know that it should remain heavy. It's showing other key signatures such as the failure to retest the open, and you have a very specific entry technique to get in. You can really trust taking a trade like that. And back to my point about the importance of identifying original consolidation, there are a whole bunch of ways to do that, and I'll draw a few little diagrams just to demonstrate it. But the first is the hourly opening prices. I just have these white lines on my chart that represent the hourly opens. When you have multiple hourly opens that are at the same level, a lot of the time that is going to be original consolidation. Also, if those hourly opens just happen to be engineering a pool of liquidity up at a institutional level, such as the 20s, 50s, 80s, or 100s, and let's say you have price action going up into that pool, then that's also another signature. Let's say this is a wick. If this is a wick over here, and let's say we have price action that's bumping up against this level, and so it's like smooth highs, and then we have a wick to the left, and if that wick has the midpoint lining up wherever, and then on whatever time frame that wick is on, we also have a closure of a candle that is past the midpoint, and the very next candle after that closure goes immediately the other way. That is another signature of a original consolidation. So there's a whole bunch of things you can look for, and things that I've noticed that help really identify those original consolidations and can allow you to anticipate a model, because if you can identify that and then you start seeing that, okay, well, we're now leaving smooth highs, I'm not worried about that because I've recognized that this is a consolidation and we're likely to expand lower to go higher. Then you are able to look for other reasons and areas where this framework would exist in price, and that's what I demonstrated today with that. And I do have my executions. I didn't do it quite as I would have wanted to, unfortunately, but if I drag this down a bit, so we have that's the retracement, the break of the low. This is that first stage. I sold the short-term high, sells off a bit. We break the low, and then as we break the low, take a partial, wait for that second break of the low, and as soon as we get that, I add it back in. Taking a few partials, then I got stopped out there. So as you can see, my entry was actually up there, so my break even would have been a bit higher up, and I could have actually caught this lead down. But that's all good. And then at this point, I thought that this was second stage, and we could be reversing over here after second stage. I tried a small long, targeting this high. The reason why that high is because with this movement up, we didn't come this deep into the range not to take out the trail stops above that short-term high. So I knew there was a very high probability of us hitting that. And I had the idea of, okay, we've had left side of the curve. This was second stage I just caught. And so this could be the reversal. It makes sense for us to head up to there. So I put on some small size, took a partial and moved my stop below this low and got taken out, but still a small win. And once we got that, that's when I zoomed out to the 15-minute chart. I saw, okay, we've just had a institutional order flow entry drill. This is now lining up to actually be second stage of the higher time frame model rather than just the small fractal. And that gave me the confidence and conviction to get short right there, trusting that if this is second stage, we will not have a very deep retrace. We will leave a gap open. And then as soon as we got that closure back below that low, adding into that position, and immediately got this sharp reaction lower and took partials as we headed into the lows. A lot of my partial taking is a bit too close to my entry points, like that's only 1R for some of those. So I could definitely improve with that. But yeah, it's cool to see exactly what I was looking for show up just how I expected to see it, and to play out exactly how I expected, and also to be able to anticipate, as I mentioned, anticipate where in price we will remain heavy, very specifically where, and that give me the confidence to take entries like this, and also have my stop at these tight areas without being worried about, oh, what if I get stopped out, then it goes my way, because I can identify that. And also the facts that, sure, we've got all these smooth highs up here, and I could have easily convinced myself that, okay, it's bullish and we're going to go up. But because I recognize that hourly manipulation closure right there, and I remembered exactly what happened last week up in this area, I then trusted that, okay, once we've got this push lower, we've also got those lower time frame signatures of a consolidation. It makes sense with a bigger picture where we have a clear high time frame market maker model playing out. We've already taken trail buy side and also 4-hour candle high from Friday. We have very clear lower targets, and so this is likely just going to be yet another level of smooth highs before a push lower, before eventually reversing somewhere in this area and making a new high, eventually getting up to this level right there, 4,420, and potentially above that. That's my short-term targets. And this is the kind of area that I'm very interested in for a reversal back up. I do think that we will, just the way the price is printing, is beginning to leave, like you can see all of these, you can see perfectly smooth lows, rallies away. Once again, perfectly smooth lows, rallies away. And here, leaving trendline liquidity, rallying away. So it's permitting traders who trade general support and resistance ideas, is permitting them to be a part of the move into the highs. If they want the general public to be buying up here, what are they trying to do? Are they trying to buy as well? Or are they trying to sell? So I kind of have the idea that we may actually be under, finally after this massive move, we may finally actually be under offset distribution, which means that we are offloading the next long position into the highs. So they need buyers at a high price, and that's what they're encouraging here with all these smooth lows. They're encouraging people to buy. People are buying, and as they're buying, that allows them to offload some of their position. That's kind of what I'm assuming, but I'm not calling the top by any means. I'm going to keep on buying gold even if it hits my targets, and if it goes to 5k or 10k, I'll keep on buying until it goes down, and if it goes down, then I'll sell. That is my trading plan. It's just to listen to whatever price action is telling me, but it is just an observation that we are clearly enticing people to buy, like just the way, like perfectly smooth lows and then getting these nice enticing rallies, taking out short-term lows, sure, but then leaving more kind of trend lines and things like that, and then continuing to push high. But yeah, pretty short video. At this point, I'm going to continue trading the session, and as far as what I'm expecting, I do expect we could head down to the sell side down here, and that is kind of where my priority lies. However, I am also aware that this is a original consolidation with these opening prices, meaning that if we do want to head back up here, that would complete this as a market maker model. So let's say first stage, second stage, reversal. If we break through this high with displacement and then start putting a intermediate term low in, then I would now expect this to continue pushing up into these highs. And you'd look for second stage of the market maker model to happen about here. So a nice short-term hit and then a run up. That's potential, but what I actually prefer is for us to maybe take out a short-term high and then just continue pushing low. Got all these long wicks, enticing longs. We're enticing longs going into the close of Friday. We've already taken out trailed stops from Friday. We have clear bearish targets, and we are clearly in a high time frame market maker sell model, because we generated these relative equal highs in this original consolidation over the course of 9 hours. That's a long time to engineer equal highs. We're not going to engineer equal highs for 9 hours, sell off for 5 minutes, then run those highs again. And that's kind of what I'm seeing here, is maybe that this entire range could be considered the original consolidation. This first stage of the market maker model of a short-term high, an intermediate-term high, and now a short-term high to the right of it. Once we break that low, maybe we can look for a second stage of the market maker sell model here, which, with the scale of everything, is beginning to look like it could even send us lower. But I do prefer the idea of us hitting lower in general for this session. So I'm going to be looking for that throughout the London session. That will do for this video.